Good afternoon. It's 4 p.m. in Amsterdam, so we're ready to start with the webinar, the MobGen webinar, Disrupting the Financial Service Industry. My name is Michiel. I'm the Chief Commercial Officer at MobGen, and I'm your host of today. And welcome you all here at the table with our specialists. A little bit about MobGen for people who don't know our company. MobGen is a leading mobile solution specialist. We create exciting mobile platforms to engage customers or employees with global brands. And we do that with 160 mobile specialists from our offices here in Amsterdam, but we also have offices in London, in Malaga, and in A Coruña. Well, one of our main focus and expertise areas is the financial services industry, and through this webinar, we would like to share our clients' learnings and their vision on today's topic, disrupting the financial service industry, and how mobile takes it all. So welcome all. Well, let me first introduce the panel members today. Very happy that you're all here. With a question to introduce yourself and also share with us your most favorite finance app, which is not of your own company. To start with you, Michiel.
Yeah, so my name is Michiel Aangenendt. I'm currently working for Aegon. I'm working there on all kinds of new businesses development, new propositions, working with new technology. I hope to come to the market soon with some new innovative services. I have a background in banking, worked at ING for a long while before this job. Also have an experience in offline, and especially the combination with offline and online I think is very interesting. My favorite financial app, well, basically that is my banking app, which now is an Aegon product, so I'm not allowed to say that. But I think a really interesting concept is Crédit Agricole. Mm-hmm. Not for their app, but they're giving access to their platform for all kinds of app builders to build on their systems and build on their data. Mm-hmm. I think that's the way to go. So not one app, but the store itself is very interesting. So it's a third-party model where people can actually develop on the technology of Crédit Agricole and access the database, of course, opt in, which is perfect. Okay. I think that's the way to go for banks.
Okay. Thanks, Michiel. Herco, welcome.
Thank you. Herco Fèvre. I'm an independent consultant at Iguacu Payments right now. I've been working in finance industry for about 26 years. Different banks, ABN AMRO, ING also for a very long time. Until the end of last year, I was head of business strategy and innovation at the payments department of ING in the Netherlands. And now I'm working on several other interesting areas, all related to payments and often also related to mobile and mobile engaging of youngsters.
Okay. Yeah. Okay. Thanks.
My favorite app, I'm not any longer working for ING, but it used to be ING, the mobile banking app. What I also find very interesting is the many peer-to-peer payment apps, especially in those markets where peer-to-peer payments are a little bit more cumbersome than traditionally in the Netherlands. Mm. So an app like Yaap, for instance, in Spain is a very good example, I think, of how you can engage young people in mobile payments.
Okay. Yeah. Okay. Thanks, Herco. Andries?
Yeah, Andries van Luijk. I am responsible for Aegon Lanschot, which is an online wealth management service provider. We basically developed the entire proposition a couple of years ago, and with some success we are now reaping the rewards of that in the Dutch market. My favorite finance app is my wife's Rabobank payment app, which in terms of user experience I find one of the best apps available at this point in time.
Okay. Okay. Well, thanks for the introduction. Let me explain a bit on the webinar. We split it in two parts of each 15 minutes. So the first part, we have 3 questions to cover. And in the second part, we have 3 statements to discuss about. For the audience of the webinar, don't hesitate to share your questions or remarks via the chat functionality. We will monitor this and pass a selection of questions to the specialists. So welcome to have active interaction. But let's start with the first question. I'd like to ask you, Andries, to start with that. So how does your company respond to the changing digital behavior of your clients and adoption of mobile?
I hope and I believe that we're first movers in terms of technological advancements where possible. Technology for us is synonymous with the solutions that we provide. If we, when we look at our client base, we cater to the mass affluent market, in particular the starting business professional, and these guys are extremely digital savvy, which means that they're devoted to their mobile applications. So with all the applications that we develop, we need to adhere to the sense of purpose of these applications. If we don't have a sense of purpose when we introduce an application, we can't get the engagement that we're looking for with our client base, and we lose out on our clients eventually. If you look at the way we developed over the past few years, we started off with a desktop version, with a web version. As soon as the iPads were introduced, we started developing applications for tablets, and we saw a shift of basically half our client base towards these tablets. If you now look at the smartphone, with our smartphone application, 90% of our sessions are actually initiated by our smartphone. So it's all mobile first, as opposed to tablets and desktops, which poses a new problem for us, because you need to develop your mobile applications first and then sort of determine how you spend your budgets on the other applications, which are second to your mobile applications. So it's taken off extremely well, but it's now mobile first all of a sudden.
Okay. And do you see a certain functionality mainly pop up when you look at mobile usage, for example?
It's ease of it's ease and accessibility, and if you look at the mobile, the way mobile applications are used, it's more it's very precise and it's very precise in the information that you need to give to your clients. I mean, it's almost a nervous tick, if you can call it that, with our clients that they just want to be up to date as to what's happening with their investments. Yeah. So you need to be aware of how they use the devices and know exactly what type of information they're looking for, and build your applications around that.
Yeah. Okay. Clear. How do you see that, Michiel?
Well, the way I'm doing it right now is that we actually started developing for mobile. So with the new ideas that I'm working on, the assumption was we need to have it working on a mobile, because we do believe that especially finance, I think banking especially, is something that there's daily relevance. There's something that you carry around in your pocket, and it makes sense to do it in an app. And we also figured that if it works on an app, you can probably then translate that back to web or even a tablet. Yeah. So the whole starting point was developing it for mobile, not only because we think it gives you the opportunity to engage with your customers basically every moment of the day, but also to force ourselves to make it simple, because I think that's one of the things that you mentioned also. It's kind of hard to translate all that we're used to as finance people, that we think of all these things need to be there. Then developing for mobile, I think that's one of the key things to make it simple again. So for us, that's forcing us to put it on a small screen like this. So that's basically the way we started, and hopefully we'll see that if we want to grow, we'll probably have to add channels. But the key point is start with mobile. Okay.
And do you see differences between different target groups, different audiences?
Yeah, everybody knows there's probably, we just talked about it before, something in terms of age and the traditions that I'm used to versus even my kids growing up with the mobile, and they're used to things that I wasn't used to as a child. I have a kid of 2 who's already swiping the phone. So I think those people, that generation will grow up differently, but I think I think for everybody it's clear that something's happening. On the other hand, what I do keep in mind working on new ideas is, I don't know about you guys, but research that we used to look at shows that only 7 or 8 apps, that's what you use actively, right? That's just, and the rest is just you tried something, So for me, it's really finding that functionality that makes sense in a daily relevance. Because if you're not part of that 7-8 apps that people use every day, then don't make an app, basically.
Okay. Herco, not working at the moment for a bank, but advising, so you can take a bit of distance. How do you see that?
Yeah, I see a lot of banks adopting a mobile-first strategy, but I also see a couple of banks already moving beyond that and going to what they call an omni-channel approach, whereby mobile is one of the pillars, of course, one of the important pillars in their strategy, but not the only one. And they recognize that people use the different channels for the different needs that they have, and these channels need to interact. So that's mostly of a matter of getting your act together in the terms of knowing your customer, to have a customer image, a central customer image, and having your data at hand, and then exploiting that data through the various channels that you have, addressing the customer. And some of the banks, I cannot speak for ING or on behalf of ING, but I can still speak about ING. I know that years ago we started with a savings campaign and we handed out these small WAP phones. That was, I think, the first step into mobile banking, mobile payments. And we got it wrong a couple of times since then, but we also got it pretty right from a certain part in history. Probably around 2012, 2013, we saw the market really shifting into mobile, and a lot of the adoption of mobile grew significantly. So I think it was somewhere in 2014, leading to 2015, when we saw the first shift of web traffic being superseded by mobile traffic. People use their mobile so frequently, especially in the logins that we saw, not so much the payment transactions, but especially the logins, the checking your balance,
Just looking
checking
at
the status, looking at it. Do I have enough money when standing in line in the supermarket even? Do I have enough money to pay with my card? And then if not, transfer something from my savings accounts to my current account and do the transaction. So it is shifting and it's moving to mobile, definitely. So you better be on board as a bank.
And I think retail banking is then really the front runner.
Oh, absolutely.
Usage.
Absolutely, yeah. But we also see corporate banking picking up very quickly, although not for all the functions, of course, not all the banking functions, but even there, signing a batch of salary payments through your mobile is of real added value to a treasurer or a cash manager. So that helps as well.
But I think still you need to have a daily relevance. There's still absolutely. A lot of things that you don't do every day. But I think payments in itself is key for mobile. I think for other parts, I think investments is something that's some daily relevance. But it's hard to find in every product that a bank offers or an insurer to find something that's relevant for you every day. You don't check your insure policy details every day. There's nothing happening there at the moment. I think there will be something happening in the future. So I think it's not a way to say we don't need to go there. But I think the key point for now it's payments.
And if you have Simon Sinek in the famous TED conferences, it starts with the why. If you cannot answer the question why in a proper way, then don't start until you've got that question answered correctly for your customers.
Okay. So how would you summarize the key opportunities? That's the next question. What are the key opportunities and pain points to delight customers using mobile? Michiel, what is for you then the key opportunity? I heard a few. We already mentioned a few.
Yeah, for me, like mobile for me is also a way to make it simple. To make finance simple and daily relevant again. I think it's also a way to make it personal. I think that's still the step that we also, for the things that we're doing online and mobile right now, is how do we make it personal? I also come from a background of offline, and there with a cup of coffee, sitting at your bank from the days that we did that. how do you translate that feeling of trust and engagement and the help in making financial decisions? How do you do that for not your daily payments, but for the bigger things you need to do in your financial life?
Yeah.
I think that's where the key opportunities are, and I think also that we've seen a lot of innovation, but impact basically in retail banking. I think the impact on the rest is still to come.
Yeah.
And I think people everywhere, and my team is working on that, and there are many teams working on that, to find those key points for customers that you can delight them with a mobile phone.
No.
I think we haven't seen half of it yet.
No. I think in terms of opportunity, it's particularly in my business, it's decomplexing traditional services and making them accessible to a broader market. That's the biggest challenge. So it's that, and adhering to legislation and regulation on the other hand.
Yeah.
There's a lot of stuff we would like to get accessible through smartphones, but legislation and regulations are so complex that the user experience that you end up with eventually doesn't add any value to the customer. Not on the smartphone app, and maybe on other devices it does add value, but that's something that that's a delicate balancing act, and that's a process where we're now in as well.
Okay. For you, Herco, pain points or opportunities?
Well, talking about pain points, I read an interesting statistic the other day that it's an American research of a financial institution in the US, and they found out that of the millennials, of the millennium generation, 71% would rather go to their dentist than to their bank.
Okay.
So
It says something.
that says something. We see a whole generation who is, and my daughter being one of them, who rarely go to a bank anymore, and would rarely go there for any kind of service, but they expect it to be on the mobile or on the tablet all the time, and be there at any time that they would like to check out. So if you cannot address that need, I think you're in trouble, especially as a retail bank. For now, and that's also a great opportunity, because these needs are, you can very clearly distinguish what are these needs, and also which channels are they likely to use. There's a lot of data already now available in retail banks, but also in other organizations about their customer behavior. But it's about also exploiting that data and using that data to get insight into what your customers are doing. And then you can address those pain points in your customer fulfillment quite easily, or determine it. If you can fulfill it, that's another business. But
because it's a bit of a contradiction. I think banks via apps have more contact than ever with their customers, but they're also a bit struggling in delivering relevant services. So
the interaction is very. If you look at what I used to see at ING, you can also compare it to looking into your wallet. That's not. You're not in contact with the bank for you. The sense is that you're looking at your money, and I think I remember the struggle indeed between how much can we send, and basically that's not different than what Facebook has as a struggle, like how much content comes from me versus is part of your network. I think that's the same struggle. How much can you push in terms of content through your mobile app? And again, second, I really believe that the personalization of the contact is still something that we all are looking for in finance. How can we make it more personal? Although the technology offers in concept a great opportunity to make it personal, but the sense of personal contact is still different, I think, in an app than talking to you right now.
Okay.
But also, what do you see as that's right now? If you look at the home screens of many of the apps, it's one size fits all. You would see in retail banking, for instance, the different accounts, your balances, etc. If you look at an app like Netflix, the content there that I see is tailored to my profile. So, and we rarely see that in banking right now, and I think that is that's one of the key things for the next generation mobile banking, that we come to grips with that. Absolutely.
Yeah, that's something we're working at the moment. Eventually, we'll have tailored websites for particular profiles.
And is there, well, please, there's a reason. Maybe that's also related to the third question. How do you deal with legacy systems and technology for not being so custom-made and so specific and so relevant? As you just mentioned.
Well, banks rarely have legacy. No, I think it is.
You say laughing as an independent advisor.
Absolutely, yeah.
Okay.
But no, but I think not only banks, but a lot of industries have a great investment in legacy, something that they, even if they would like to get rid of, they can't in the short term. Hence, it's called legacy. But I think you don't need to worry about that too much as well, because you need to find the decoupling points. Where do I decouple my mobile presence from my legacy? And which technologies am I going to use to do that? And of course, your legacy platforms have to evolve as well and gradually grow into new technology as well. API technology, for instance, can be applied on a great number of legacy platforms as well, and can unlock your potential of your back office towards a mobile channel quite easily without too many pain points. So,
how do you see that, Andries?
Well, we have the good fortune that we don't have a lot of legacy. We have a fairly young system, so we started off from scratch without any legacy issues. Which has helped us in terms of the speed with which we can develop our services. But we're constantly monitoring technological advancements, client needs and adapting our services appropriately. So we believe that our applications have a life expectancy of 2 to 3 years, and every 3 years you need to come up with new stuff, new ideas, and new relevance. And if you don't do that, and if your company doesn't see that, you might as well pack it in. If you go online, it's inherent that you have development costs, and that you have constant development costs, which will probably take on in size, because the capabilities and the solutions that we can offer are enormous in the future, in my opinion. Especially when you integrate everything.
Yeah, the thing that I'm right now doing is building a new set of technology, new stack, which is great. I think you've had the same experience. Also to first get the functionality for the client in, and then test if that even works before you start worrying about the integration with your legacy system. Because I think that's the time of now. All of us at this table, we don't know exactly what clients need. I think the time is all about testing stuff, pivoting, and just getting feedback. And first testing the functionality and then seeing if that's going to be a problem for a legacy. And I think what Herco just mentioned, APIs there are fantastic. It's a big promise in terms of what that can do in terms of new technology, old technology. I think the issue will disappear in the end. For me, it's really now just getting the functionality in, see if it's successful, and you can always worry about legacy later.
Probably you have to worry at the same time, but not.
Yes, of course, it's a parallel.
You need to take it into consideration.
But I think
it shouldn't stop you.
What I've seen at my previous employer was also that you could think of these great builds that to put them online was really hard work. You had to put a lot of effort into getting something online, and that can take a long time. That's my experience, and also the things I've done at ING, even way back in the post-bank era. It just makes more sense to test the proposition first and see if it works. That's my point. And I think you need to do that quickly and continuously and learn, and not depend only on legacy. But for a client, it becomes more relevant. How is the journey? If you add something for a bank, you need to think about how that works with your payments, with your savings, with your investments. So for a client, it should be something you notice, whether it's a legacy or new technology. So on the front end, I think you need to integrate stuff pretty quickly. But coupling, decoupling, that's the key words. APIs, we love APIs. So,
Okay.
But I do believe that if you're saying first make it work, then make it better, you can do that if you're a first mover, because clients or your client base will accept that. If you're a laggard, and you then come up with apps or solutions, online solutions that don't meet the minimum required level in terms of hygiene, then you lose the boat as well.
Yeah, and I think that holds for a lot of financial services. That right now, I think most clients, especially in the Netherlands, most clients expect there's a mobile application for the stuff you do with them. Yeah. And there's some way of interacting with the company on a mobile platform. That's hygiene almost. That's that's not innovating. So you're right. Yeah, that's true.
That's the marketing slogan, like be first or be best. And if you can't be the first one, try to be the best one. But also by learning from others who've been there before. Done it before, not only your own mistake, but also mistakes from others.
I think the key, somebody helped me last time with something I was working on by saying Google wasn't the first search engine. We've seen many search engines, and then came Google. So there's always an opportunity to do something better than already exists.
Okay, clear. Thanks. Okay, let's move to the first of the three statements we're having. The first statement is becoming more innovative will be key for successful future engagement with your clients. Herco.
Oh, absolutely. Your customers will expect that from you. Once they've come to know mobile technology, they want more of that. And for me, it's essential how you organize yourself. And like you mentioned, it's not about developing something, put it to market, and then let's wait and see. And then comes the payback time. All business cases are built on that. Like, what is the return on investment time? What is your that doesn't work anymore. It's a constant development, and you have to organize yourself also in a way that you're constantly developing what you've been building the day before. So in an agile Scrum methodology, and that doesn't only mean releases who are packed shorter to one another, but also your organization has to be shifted into that model to cater for your customer needs.
With multidisciplinary teams.
Multidisciplinary teams who are constantly bringing in sprints new features to the market, even the smallest ones. And we talk about a lot that it has to be complete and it has to be overarching and it has to do everything at the same time. But if you develop like that, you will never reach the point where you can comfortably go to market. So you have to, the first releases will be probably 25-30% of the features that you would have in mind. But it's more about how quick can you resolve and how quick can you add, as opposed to how big will my first bang be.
Or how you can use technology to your advantage to create innovative ideas, because innovation is a means to an end, not an end in itself.
Sure.
And if you have a multidisciplinary team that is capable of using all the various disciplines, putting them together, making the connections, and coming up with creative ideas, then you're innovating, and then you've got a recipe for success, in my opinion.
Yeah. How's the Aegon organization coping with that, Michiel?
Well, I can't speak for the entire Aegon organization, because I think what we're doing is also experimenting in the style of working together. I think Agile Scrum is obviously something that we need to incorporate. But it's a big change. I was with ING when they made that big change a year ago. It takes a lot. It takes a lot. But I think everybody knows that there's a different model out there that has to fit with your company. So it's not the same model for every business. I think it works differently even within different finance organizations. But I do believe in the end-to-end Scrum methodology that sometimes the idea comes from somebody that can code really well, and sometimes the idea comes from somebody that knows clients really well or has the data to find out where the pain points or the opportunities are. And I've seen that work in my years. So that's the combination of that is key, and also in the velocity of solving issues, because technology is difficult. It's hard to put out new functionality because there's connectivity, there's testing, and it just works better if you're close together, working together. And I think I hope at least most financial organizations are gearing towards that model.
Yeah.
I would expect so.
Yeah. Okay.
And innovation, again, I think is key, both in technology and in what I said. I think the disruptive technology or even app or mobile platform, as you would call it, for finance is still to come. I think we haven't seen nothing, and that's really my belief. And in that way, working on scanning the marketplace, scanning what your customers are doing, for me is just really looking for that new business model every day. Because it's
you need the guts to experiment.
Yeah.
And look for these new business models. I think we're
and try things. Basically.
Yeah, we're living in a fascinating time because we don't have the answers. We don't know what model is sustainable for the future. At least we're trying.
Yeah.
And eventually we'll stumble upon something that'll work and that has longevity. But if you don't do anything, you're bound to miss out on everything in the end.
Yeah. Yeah. Okay. The next statement, it's a bit of a bold one, but let me phrase it. 25% of the companies in financial services in 2026 will be new entrants that do not exist today.
I think 25 is a bold number. If you look at the financial industry, it has a lot of barriers to entry in terms of legislation, permits that you need to enter into the market.
But you see also European legislation coming up, opening up banks to.
Yeah, but it makes it very difficult for a startup company to enter the market because you're going to have to do that with a huge technological base, which means that you need a lot of capital to enter into the market. So the ones that succeed will probably be significant game changers.
Yeah.
And players that we didn't think of in the beginning. I mean, Google's one of these players. In terms of if you look at crowdfunding, that might be a significant game changer in the banking industry.
Mm-hmm.
But if you're talking about APIs, which I think is the way forward at the moment, I think a lot of the new entrants will be fintech companies that are capable of connecting specific API platforms to come up with new solutions, and they'll probably focus on overlay type of services as opposed to creating new solutions. So in my opinion, the new entrants, the new companies that will enter the market will be those type of companies.
Mm-hmm. Okay.
Yeah, my sense, I thought there's a couple of ways to look at it. I think that, again, as I mentioned it before, I think that the new financial services still have to be invented. So
Yeah.
I think the pie is just going to grow. In terms of, if you look at what a retail customer or even a commercial customer now does, it's certain payments, it's saving, it's still the basics. And I think there's a lot to do for financial services, whether you're a startup, whether you're an incumbent, just to think of new services. So in terms of the new service, I think it's going to be more than 25%. In terms of who does the payment, in terms of the back office, I think it won't be that big. So I think it's
connected services.
I really believe in connecting stuff. I really do think that there's going to be something that is bigger than finance, because things are going to be connected in a way that we can't imagine right now. So financial services becomes broader and broader and broader, and I think there's a lot of opportunity for both startups as well as for the big companies, and also in the combination to see what is out there, what there's still to offer for especially for retail customers.
Yeah.
I think there's still a lot to invent, basically.
Yeah.
So it might be 100 for that part.
Yeah. So retail is a segment you expect maybe.
Well, it's a segment that I know the best.
Yeah, okay.
So it's the easiest for me to talk about.
Yeah,
and I think to look at maybe what you do as a retail customer, you have your payments app, you have your savings, your investments. I think people going to a bank is fairly limited these days. But the kind of financial struggles that persons have, the sort of the internal voice that says, is everything okay?
Yeah.
I think there's still a lot to do. And also the connection with all kinds of other devices, connected home, connected city. You can come up with any kind of thing, and you think about something that has a financial impact. Yeah. So for me, the pie is going to grow in terms of what is there to do, and not so much a struggle between what has already existed.
Okay. Okay. Herco?
Yeah. Well, I agree to Michiel. I think the pie is going to grow in the coming years, and it will also shift a little bit because we will probably see financial services coming up in areas where we did not expect them to come up. Having said that, new entrants have also pretty hard time in entering the market, and it doesn't necessarily relates to the size of a new entrant. I remember Google Wallet, for instance, or nowadays Apple Pay having a really hard time in getting some volume onto their payment solution, for instance. So it's not necessarily that that the big ones will take over or small ones with disruptive ideas will take over the entire market. I think that they will be connect to what's already there, to the existing markets, and pick a share of that. And legislation is helping them in a sense. PSD2, for instance, opening up access to accounts will help them, but at the same time will regulate them as well, which was essentially nowadays a kind of a free market for those new entrants. Will also become a more regulated market that will also set some game rules to new entrants as well. So leveling the playing field. So,
we got a question from the audience, so let me phrase it and put it on the table. I see KLM innovating with chatbots serving their clients via Facebook Messenger. What's at the table the expectation regarding this technology for the financial industry? I think you introduced the bots with Avi.
Well, we don't have a bot as such in place. It's something we're looking seriously at, but once again, it needs to have a purpose and it needs to be credible. If you have something walking around that doesn't meet your needs or doesn't answer your questions, you miss out. And especially the pace in which you're developing, you need to make decisions as to what do you introduce to your customers first. So it's something that we're looking at, and once we stumble upon a solution that works and in our opinion adds value to the proposition, then we'll introduce that.
I actually went to Asia this January, and I looked at the WeChats and the lines, what they're doing, and also the opportunities, and also their companies are still looking for the business model, but the fact that there's traction there, at least on those kind of chatbots, and the way you just get your car insurance through a chat, you just type in your license plate and some details, and it's done. So you can't ignore it. I think especially also because I think a lot of the development in terms of apps have been around trying to get a conversation going, and what better works than a chat functionality than a conversation. So I think that it's hard to ignore, and I think we need to experiment there as well, also within finance.
I believe chat solutions are there at the moment, and then they have enormous amounts of value, especially if the organization on the back end side functions in the way that the user demands. But robotics as such, autonomously, that's a different ballgame, and you need good algorithms to create something that has value.
I think there is now also a debate going on in the United States about investment advice through bots, and who's responsible for that. What are the algorithms underlying their advice? If I'm talking to a financial investor advisor, at least I know who I'm talking to.
You always need that as a fallback.
And
you can only go so far with chatbots, but at some point, if it becomes too complex, you need to speak to a physical person or chat with a physical person.
And there are some pro and cons, because a bot is basing itself on the data that's already there, the data that it has on you, the data that it has on the market, but then the finesse and the interpretation that I think is very, especially in the financial services industry, that's very important. And I think for the time being, humans excel in that.
Okay. Now let's move to the third statement. We already touched it, Andries. Legislation is limiting financial institutions in their digital innovation. In the beginning, you spoke a bit about the limitations for mobile regarding legislation.
Yeah, what you notice is that certain aspects of the process of the operational processes that we have. If you look at discretionary asset management, if you look at onboarding, for example, when you have to adhere to the legislation, it doesn't allow for a solution on a smartphone app. It becomes too tedious. It's a very long process, and it defeats the purpose of getting your customers to onboard via a mobile solution.
Mm-hmm.
And what you're trying to achieve is adhering to that legislation, but you want the solution to be accessible in a very simplistic manner. If you can't decomplex the proposition, you're not gonna solve the problem. And I think one of the issues that I find is that within the regulatory bodies, there's a need for tech teams that understand the technology, understand how legislation is imposed, but how you can use technology to come up with solutions. And at times it's difficult, especially in the pace we're developing, where we're trying to reach the gray areas, and you would like to consult these legislative bodies to determine if your solution is an acceptable one and a viable one. And at the moment, the relationship between the regulatory bodies and the banking industry is not one that encompasses.
It's no co-creation.
No. There's an element of fear in that relationship, and that's sad to see, because it's going so fast. And I believe that the regulatory bodies are there to safeguard the consumer, but the way they're doing so is also old-fashioned. I think these instances need to come up. Need to innovate themselves as well in terms of how they communicate with the customers, how they try to protect the customers, and how they try to go about in placing legislation on banking. On the banking industry.
Do banks work together on that? Is it to make that happen? Is it
to a certain extent they do? Yeah.
Yeah, Herco.
Yeah, banks work together as far as of course allowed by the competition authority, but also towards supervisors, for instance. Absolutely, because everybody needs to understand the new possibilities of devices like mobile. At the same time, you would like to have some safeguards in the system as well, of course, and legislation can help you there. Legislation also sets the boundaries. I would view upon them like I play golf, and in golf you have the out-of-bounds territories that mark the golf course, and
you shouldn't be there.
And you should not be there. And everybody plays to the same rules, and I think that is very important in financial services industry, that the same animals are governed by the same rules, so to speak. And then legislation should not limit you in digital innovation.
Okay.
There are some things that you would like to do that you can't do, but it's also protecting you and your customer from going away.
Yeah, it's there for a reason, right? So I think it's not limiting. I think there's still a lot of stuff to do with legislation. I do agree with you that sometimes legislation can be a boundary in terms of the service that you can offer to your customers. I think the advice part versus execution only is a good example of that, and maybe there are models in between. The AFM was already in 2013 wrote about it, and then you have to think about the customer. So again, making a customer-centric proposition in the end will always, at least conceptually, adhere to legislation, or at least should be convincing enough to talk with the bodies that go out and make those kinds of legislation, to show them that it's actual value. So I think there's I do believe that we talk about legislation a lot in finance. I think if you work in health or you work in chemicals, you probably think the same. So I think it's not something that is specific to something like finance. I think what has happened over the past 8 years with the credit crisis, and also the way people and customers and just consumers in general look at financial institutions, make it a little bit different. Sometimes it becomes a risk to test something out, especially because of the eye of the customer. But again, if you start out with something customer centric, there's not too many rules that are in the way, I guess.
Yeah.
Okay, we need to wrap up because we're almost at the end of the webinar. Can we finalize here with what would be, Andries, your advice for more innovation in the financial sector with your expertise?
I just have one advice, and that is just keep experimenting.
Okay. Yeah.
And have fun while doing it. You don't have the right answer, and in the end, you'll stumble upon something that is successful, and build up from there.
Okay. Michiel?
Yeah, it's something that I took from Singularity, basically. The things we think about, talk about at this table, we're used to thinking linear. So growth and new technologies, we think things are growing linear. And I think the lesson here is that these new technologies, these new ideas will grow exponentially.
Yeah.
And so you're caught by surprise if you think everything is going to be a linear line. And so I agree with you. Just things are going to go differently than you can think of at a table like this. And if you expect that and are open for that, then you have the best chance to survive.
Keep an open mind.
Herco?
Yeah, building on that, which I fully agree to, I think you should start molding your organization gearing up your organization to this new reality. Make some changes in your organization as well, because traditional organizations in the long run will not be able to keep up with this pace of development.
Yeah. Okay. So, well, let's close with that statement and challenge. Thanks for being here. Thanks for taking the time. Thank you for watching this webinar. You can watch this webinar again on our YouTube MobGen channel. So you can also forward it to people you think it's interesting for. If you have any questions how mobile can be used at its best to engage with your clients, or if you want to receive the MobGen monthly newsletter, don't hesitate to contact us via mobgen.com or mail us directly, and we are happy to serve you. So thanks a lot for joining, and hope to see you all soon.
Thank you.
Thank you.